Hello traders, my name is Tomasz Wiśniewski and I am Head of Research and Education at Axiori. Welcome. Can you please tell me if you can hear me, if everything is okay with audio and video? Do you see the presentation? Please write on the chat. Perfect. So again, hello, it's a pleasure to be here with you. Thank you for coming. And without further ado, I want to start. Because, my dear friends, we have 9 webinars ahead of us. We start today with very, very basic topic. So, an introduction to the Forex market. I will tell you what is Forex market, who are the market participants, what are the differences between the Forex market and the stock market. So, this will be your base, and from this webinar, we will start. Every next webinar, we will. We'll focus on more interesting stuff and a little bit more difficult. With every webinar, you will be closer to the situation when you will be able to create your own trading system, and you will know basically everything what is important in order to be a good trader. So let's start, my friends. Before I will go to the technical part of this presentation, I need to introduce myself a little bit better, because I think that if you are learning how to trade, the person who is teaching should be a trader, with good results, right? Because if you want to be a surgeon, you want to work in a hospital as a surgeon, you need a proper education, and people with years and years of experience teach you how to be a good surgeon. If you want to be a pilot, you need to undergo like hours and hours of courses. And as a passenger, I don't think you would like to fly with a pilot who does not have enough training, and or who got training only from, let's say, pilots who didn't fly, never. Okay, that's why in trading it's the same. You need to get the knowledge from a person who is a trader, who knows this market, and who knows how to trade, who has a long experience trading on a real account. This is very important, because sometimes you can get education from a person who does not have experience in trading, and this person will just tell you theory from the books, and sometimes it's just books. You need a proper practical experience, practical approach, because sometimes practice is different than theory from the books. So again, let me introduce myself. My name is Tomasz Wiśniewski. I'm a professional trader for over 10 years. I focus on the price action, which is strategy system based on the technical analysis alone, without any indicators. It's based on the watching how the price moves, candlestick patterns, technical formations. So that's my focus. As I said, 10 years of experience, and during that time I had loads and loads of webinars and seminars, live seminars across the globe, from Mexico to Philippines, and many continents. I just haven't been to Australia, but maybe in the future. So thanks to this, I got to know hundreds of traders, actually thousands of traders across the globe. I know what are your problems. I know in which parts are you struggling. I know actually what you want. I know, and the best way to teach you. That's why I'm here now. Okay, apart from this, I'm attending media interviews, videos, TV, radio, magazines, newspapers, etc. And also I am an academic guest lecturer on one of the best Polish universities, private Polish universities, where I was teaching about forecasting interest rates and exchange rates on the market. Okay. Do you hear me, guys? Because I think that some of you cannot hear me. I can see that I am streaming audio. So, guys, any problems with the video or audio probably, unfortunately, will be the result of your internet connection. And I hope everybody will be able to hear me. But if not, my friends, don't worry. If not, this webinar is recorded and you will get the recording of this webinar. Everything nice and clear, so don't worry. Okay, beautiful. Let's start. Forex market. Forex is a shortcut from the foreign exchange. Forex has a shortcut itself. It's FX. So everywhere where you will read FX, Forex, it's foreign exchange market. So a place where you can buy or sell currencies. It's a market where investors, speculators, importers, exporters buy or sell currencies. It is the biggest financial market in the world, and it has the most dynamic growth, or it had for many years the most dynamic growth. Recently, a few years ago, cryptocurrencies were on the top, especially at the end of 2017. Who are the market participants, my friends? Name the market participants. 4 main groups. Please name on the chat who are the main market participants on the Forex, on the foreign exchange market. Please, please, please. Banks, thank you very much. So banks, here we have, I'm sorry, here banks. So financial institutions, hedge funds, etc. Institutions, hedge funds, banks. Beautiful. What else? What else? What else? Who are other participants? Companies. Yes, companies. So exporters, importers, they also attend the Forex market. For example, a car maker from Germany, BMW, for example, is selling cars, let's say, to Nigeria. So you pay Naira, then Naira has to be transferred or into dollars or into euros, and then BMW gets euros and pays the employees their salaries in euro. In order to exchange it, those companies need to do this on the Forex market. Maybe you don't know, but even when you're exchanging money for your holidays, so you're traveling from, let's say, Malaysia to Europe, you have to exchange ringgit into euro. You do this in the local exchange office, but later it is done in the Forex market. Actually, this exchange office is attending the Forex market. So we do have companies, exporters, importers. I saw also governments. I saw also answer about the governments, central banks, and governments. Obviously, very important group of market participants. And we do have, I hope that someone mentioned this. Speculators, traders, that's us. Speculators, traders, retail traders, people who just trade on their own. Maybe it's not the biggest group, but still important. Beautiful. About the retail traders, about small speculators, we can name them John Smith, right? It's a common name, John, name, Smith, surname. So what about the Forex market for us, for retail traders? Even if you have, let's say, $100,000 and you trade on the Forex market, you are still a retail trader. Even if you have $1 million, but you trade on your own, not by an institution, etc., you are still small retail trader because this market is so huge. My friends, 20 years ago, this market was not available for retail traders like you or like me, because the costs were simply too big to attend this market, to join this market. But then brokers decided to group our small trades of small retail traders and forward them together to the market. And now retail traders, so me, you, hopefully in the future, once you will finish this cycle, those 9 webinars, you will be able to attend this market with confidence, obviously, because you can't trade right here, right now from the day one. But this cycle of webinars will give you more confidence and especially a lot of necessary knowledge. But anyways, retail traders respond for 3.5, 3.8% turnover, with the Japan the biggest market. Okay. When and where do we trade? Coming back to Japan, guys. Japan is the biggest market for retail traders. Who can tell me why? Who can tell me why Japan is the biggest market for traders? For retail traders. Who can tell me why? Any ideas why Japan? There are a few main reasons. No idea, my friends. Let me tell you why Japan. Okay, why Japan? First of all, Japanese government has enormous debt. So government is borrowing money. Maybe your governments, I don't know where I'm from all over the world. Looking at the history of our webinars, really we have traders from all over the world. Your governments probably borrow money from international institutions. Okay, International Monetary Fund, other central banks, etc. Japanese government borrows a lot of money from their citizens, from Japanese people, by issuing bonds. So trading bonds is super popular in Japan. So that's the first reason. Traders in Japan have really big experience in trading because they used to trade bonds. This is very, very popular. Also, well, Japanese people are very smart, very educated. That also helps in trading. Trading is an activity where you need this education. That's why we are here, guys. You need to be educated in order to trade. And also rich history of trading, not only bonds. They have experience now from trading bonds, but rich history. Japanese candlesticks from 17th century. Back then, Japanese market was very, very big for traders. So this is it. These are main reasons why Japanese people trade. Where and when do we trade? Guys, there is no single stock exchange for trading currencies. So it's not done in New York, for example. What is happening is that you have various financial institutions all over the world, and those are connected with a network. Okay, it looks like this, more or less. So we can trade all over the place, all over the world. Let me read that. And we all know that the world is round. Well, some people believe that the earth is flat, and then you go to the end of the world, and then you can jump. According to the science, it's not necessarily true. So, earth is round. Yes, yes. So, the day starts here, and it goes on and on. So first, markets in Australia and New Zealand are opened, then Asian centers, Tokyo, Hong Kong, Singapore, Kuala Lumpur, that's Philippines, I'm sorry. Here, Singapore, Kuala Lumpur, Hong Kong, Shanghai, Tokyo. Then we go to the Middle East, then Europe and Africa, and then Americas. And you can trade 24 hours a day, but 5 days a week, not 7, 5. There is a weekend for traders. So, I assume that most of the traders here are from Nigeria, right? Are from Nigeria, probably, from the history. By the way, I visited Nigeria 3 times. I was in Kano, Abuja, Lagos. Many friends in Nigeria. Beautiful country. I love it. I'll be back soon. I need to go to the embassy for the visa. The consul is my friend because not many people get the business visa to Nigeria. So, yes. From our point of view, Europe and Africa, because we share the same time zones, right? Trading starts on Sunday evening because it's already Monday here. It's Monday here in New Zealand and Australia. So they start trading. Here it's still Sunday evening. Trading goes on and on and on and finishes here. Finishes in afternoon American time, which makes it late evening Friday our time. So trading is like that 24/5. On the weekend we don't trade, we just spend money earned while trading. Beautiful. What can we trade, guys? Tell me. What can we trade? What do we trade? Currencies, beautiful currencies. Yes, this is most obvious answer. Forex market originally is a currency market, but it's not the only asset that we can trade. We can also trade commodities, like for example gold, oil. Beautiful. Thank you for your answers. Natural gas, different types of oil, different metals like silver, palladium, etc. We can trade indexes, S&P 500, DAX, FTSE, CAC 40, which is French index, etc. And some platforms also offer cryptocurrencies, but not cryptocurrencies per se. They offer cryptocurrencies contracts for differences. So you don't actually own a Bitcoin, because to own a Bitcoin you need this code, blah blah blah, Bitcoin wallet. But you can trade, you can bet if the Bitcoin will go up or down. So you are buying a contract, buying or selling contracts for difference. Copper, yes, thank you. All those answers are great. Let's move on. How big is this Forex market? Guys, maybe you didn't realize this, but this market is absolutely huge, and I will show how we compare the Forex market and the stock exchange market. You cannot actually compare how big the Forex market is. Guys, most recent report from Bank of International Settlements gives the number above $6 billion. And this market is constantly growing. On the report from 2016, we saw a decline, but then upswing again. And you have different types of instrument to trade. You trade FX swaps, currency swaps, options, other products, outward forwards, spot trading. So it's not only this that we are seeing on the platform, right? This market is enormous. That's why when I told you that when you have $1 million, you are still small. You are still a very, very small fish in this pond, in this ocean. Actually, when you have $1 million and you go on your local stock exchange, probably just by your trading, you can move, you can establish price of various assets, of smaller stocks, for example, of smaller companies with your own money as you alone. On the Forex market, it's impossible. You cannot move the market with even $1 million because it is absolutely huge. So $1 million does not mean a lot. My friends, I told you about the currencies, that we can trade currencies. But what currencies? What's that? USD. What's that, my friends? Dollar, American dollar. Thank you very much. Euro, Japanese yen, EME. What's EME? Okay. Emerging markets currencies. This is a basket of emerging markets currencies. For example, Polish zloty, Russian ruble, Indian rupiah, etc. Indonesian rupiah. You can see that dollar is the biggest currency in the world. Absolutely biggest, most widely traded, etc. There is a question. Why? Why USD? Please tell me, why USD is the most widely traded currency in the world? Harvey, largest economy, yes. Warren, most liquid, yes. Most reliable, yes. Stable currency, world currency, most trusted by people, strong economy. Okay. Yes, many of those answers is truth. Many of those answers is truth. But let me tell you a little bit about the history. We all know World War II. When did World War II happen, my friends? Which year? 19... Yes, it ended in 45 and started in... Beautiful, thank you very much. 1939. Germany attacked Poland on 1st of September 39, and this is how Second World War started. Which country was the global hegemon, the most important economy, the biggest player in the world before Second World War? Actually, before World War I and World War II. Britain, UK, British Empire. British Empire was the biggest, yes. And the pound was the most important currency. UK was the global superpower. British Navy was controlling trading routes. And who controls the trading routes all over the world? Who controls the seas? Controls the world. Who controls the movement of the goods? Controls the world. Then after Second World War, Europe was destroyed, and this hegemony was transferred to United States. Yes, United States became the world hegemon. Why? Why, my friends? I'm sorry I'm talking about history, but it's important to know because we are getting close to another switch of the global powers. Okay, the shift was made not after the end of the war, but even during the war. In 1944, Bretton Woods. In 1944, it was more or less clear that Hitler will lose, Allies will win. So countries fighting with Germans, with other Axis countries will win. United States, Russia, Poland, France, and other countries. And the USA created the whole system because they knew that they will win. So they decided to take over the control over the world, over destroyed world, over the world which is tired after those two great wars. Also, many European countries borrowed a lot of money from United States. United States started to producing a lot of goods and sent those goods to allies in Europe. They had a huge debt. It was both. United States became superpower because it borrowed a lot of money to allies, so they had to pay it back. But also, at the end of the war in Bretton Woods, they created a new world system based on the creation of various institutions like World Bank and others, United Nations later, International Monetary Fund, etc. All those financial institutions were controlling the world, and their functioning was based on the American dollar. American dollar became the reserve currency. If a government somewhere wants to borrow money from other government, has to do it in dollars. When you want to trade oil on the market, you have to do it in dollars. Okay, everything is done in dollars. Now, many countries like Russia has an agreement with China to trade oil without exchanging to dollars. But for many, many years, everything was done in dollars because United States created global system, global financial system based on the American dollar. That's why dollar is the king right now. What is the country which is trying to change this situation right now? American dollar hegemony is threatened by China. Thank you very much. Yes, China. Okay, my friends, let's move on. Then we have those three major currencies. The next one is British pound, Australian dollar, Canadian dollar, Swiss franc, Chinese yuan, Hong Kong dollar, New Zealand dollar, Swedish krone, Korean won, Singaporean dollar, Norwegian krone, Mexican peso. And as for the pairs, almost all major currencies are quoted with the American dollar. We have three pairs without the American dollar. You can see the share of them is really small. So euro to British pound, euro to Japanese yen, euro to Swiss franc. Okay? Yes, it is clear. As you could see here, you trade in pairs because with one currency you buy another, or you sell one currency in order to buy another. You cannot buy just a dollar. You buy dollar with something. So I buy dollar with my Polish zloty. You buy dollar with Malaysian ringgit or with Nigerian naira. All right. So you have currency pairs. One is base currency. So the first one is a base currency, and the second one is a quote currency or counter currency. And Very important. When you go to the exchange place, you want to exchange money for your holidays. You can always see buy price and sell price. It's the same on the Forex market. There is no one price. If you already opened the Forex platform, MetaTrader 4 or CTrader, you can see that there's one main price. So the chart is drawn by one price, okay? It may create a situation that you think that on the Forex market there is only one price. No, there are two prices and they are used equal amount of time. Because if you trade with one price, then you trade with another. You close this position with another. Okay, if you trade with bid, you close it with sell. If you trade with sell, you close it with bid. So those two prices are used equal amount of time. And bid price is the smaller one. It's used to sell currency. Ask price is this higher one, is used to buy currency. Spread. The difference between those two, difference ask minus bid, is spread. If the spread is low, the real cost of opening a position is low. That's why you need to look for brokers with tight, low spreads, like Axiori, for example. We have super tiny spreads to make your trading as comfortable as possible and as less costly as possible. Okay, so spread differences between those two prices are really tiny, and on major instruments those differences are usually the tiniest. Spreads are the smallest, are yes, very low. On the instruments which are less liquid, those spreads are a bit higher. Next slide, my friends. As you can see here, you have list. This is MetaTrader 4, so the platform used for trading. Here is a list of the instruments. You can see different instruments which you can trade, bid price and ask price. Here you can see the chart. The chart is drawn by the lower price, so by the bid, but both prices are used equal amount of time. When you click here on this triangle, you will see two prices. That's one-click trading, so you can trade only with one click. You can see the bid price and the ask price. The difference is the spread. You can turn on the ask line to see the ask line. Like, for example, here is less liquid instrument, so the difference between bid price and ask price is a bit wider. You can turn on the ask line on the platform, so you can see it. It's especially important if you're just starting trading or you trade on the instruments with bigger spread, because you need to remember to include this spread. Yes, Axiori is a broker, is a Forex broker. Forex broker means that we, through our platform, will allow you to trade on the Forex market, because you wouldn't be able to do this. You need a broker to do this. Okay, let's go. You trade different positions. You can trade small, you can trade big positions, but you need to know what are the positions. How do you name it? So you usually trade lots. One lot is 100,000 of the base currency, of the first currency in the pair. That's one lot. So if you trade one lot, it means that you're controlling 100,000 units of the base currency. 100,000 units of the base currency. That's one lot. You can trade one lot. You can trade 0.5 lot. You can trade 0.2. You can trade 0.15. You can change it yourself. You can trade 5 lots if you have big account. You can trade 10 lots as well. Okay. Can you record this webinar? Not necessarily, obviously you can, but I am recording this webinar and I will post this webinar on YouTube and you will get the link. Voice is here. Yes, we have voice. Most people hear me, so the voice is being transmitted. Anyway, let's get back to our presentation. Leverage is a very important and I don't want to say unique thing for the Forex market, but it's very characteristic for the Forex market that there is a leverage. The leverage is a tool which allows you to control more money than you really have. So with leverage of 1 to 100, $1,000 can control 100 more, so $100,000. In this case, $1,000 controls $100,000. It allows you to open much larger positions than without it. Why the leverage was created? The leverage was created for two reasons. First one is because the movements on the Forex market are really low. Someone can tell you Forex market is very volatile. My friends, Forex market is not volatile. Stocks, like let's say Apple, can move, let's say 2% a day. Normally, lazy day. Euro dollar, USD, moves 0.5% a day. When Euro USD moves 1% a day, it means that something crazy happened. Forex market is less volatile. So in order to make usage of those small movements, they created leverage that you can control more money so you can use those small movements. Okay, this is the purpose of the leverage. But also another purpose of the leverage is for small retail traders. When you want to start trading, you don't go on the stock exchange with $100 because it's pretty pointless, because profits will be small. But on the Forex market, if you enter with $100 and you add the leverage, you can make quite decent amount of money with this because you control bigger sums. Obviously, I have to tell you that in the same time you can win, but in the same time you can lose. Okay, so leverage is two-edged sword. Okay, it can make you happy, but it can make you also sad. Those bigger profits that you can have with the leverage mean that you can also have bigger losses if the price will go the other way. All right. All right. Yes, there will be video later. Don't worry, guys. It's recorded. It's recorded. If you lost the audio for a few minutes, don't worry. Watch this back again. Because again, you will have to watch it again because you need this knowledge because it's super important. So watch it again and everything will be clear. Don't worry, my friends. Let's go. What do we have here? Chart with the price. What is the price doing here, my friends? Tell me. What is the price doing here? Up only here. In general, the price is going down. So yes, this is a downtrend. On this market, the price can go in three directions. On this market, the price can go in three directions. The price can go down, as we can see here. The price can go up, as we can see here. But there, at some point, the price can also move just sideways. Here, without any direction. So we do have an uptrend, we do have a downtrend and sideways trend. We can divide this. So look at this. Here is an uptrend, here is a sideways trend, and here is a downtrend. But this is just a part of bigger uptrend. This is how price moves. Let's take a look at long position. This is an example of long position that you know how big position you should open, what does it mean that you have pips, leverage, how big should the deposit be. Your deposit is $1,000, my friends. But that's an average deposit. I don't want to say if it's a lot or not enough. Everybody trades with the amount of money that he or she has, right? We will not tell you that you have to trade with a lot of money or start low. You have this amount of money, you trade with this amount of money. This is $1,000. Leverage is 1 to 100, which makes your real trading capital $100,000. Thanks to the leverage, this original position is multiplied by 100, so you control 100,000. Let's say in this practice that you open one lot on euro-dollar with the price 120.10. The price goes up and you close your position on the price 120.65. You made nice profits. How big profits? Well, we will see. First of all, you need to count the amount of pips. That you made in this trade. Okay, so you made 55 pips. 120.65 minus 120.10, 65 minus 10, this is 55 pips. With this trade, you made 55 pips. What does it mean? I will show you later. The same goes the other way. Guys, this is one of the biggest benefits of the Forex market, that here you can trade both ways. You can as easily buy as sell, which makes it brilliant, which makes it beautiful. You can as easily buy as sell. So on the stock market, when the price is going down right now, we have coronavirus, so traders are selling. On the Forex market, when you don't lose money like that, because on the Forex market you can easily sell. So you can sell here and make profit here. On the stock market, when the price is going down, you're losing money. Simple as this. On the Forex market, not. Okay, the situation is similar. So we have deposit of $1,000, leverage of 100, so you control $100,000. The difference here is that you sell with 120.65 here and you close your position on 120.10. This situation is the same. You make 55 pips. Meaning of the pips, guys, this is the slowest amount that price can change. So, for example, it's like a cent, okay? For example, let's say you pay $100.20 in a shop for something. The next price is $100.21. It's 1 cent more expensive than this. On the Forex market, it's pip. It's the smallest point that the price can change. There is also a pipette, but for the sake of not confusing you too much, I will say that the smallest amount that price can change, this is pip. Yes, let's go. So what is the pip value? Well, pip value depends from the position size. If you open one lot, so you control 100,000 of the currency, one pip is worth $10. Here, one pip is worth $10 too. One pip is worth 10 francs. So pip comes from the quoted currency. The position size comes from the first currency, base currency. This comes from the quote currency. And when you trade one lot, one pip is worth $10. Thanks to this, now you can calculate how big is the profit. So if you open one lot of euro dollar on the price of 120.10 and close it on 120.65, you make 55 pips of profit. Pips of profit. One pip in one lot is worth $10, right? $10, which means that you make $550. Okay? Yes. Okay. No, leverage does not depend on the amount of money invested. Leverage is built in your account. You can change it. You can move it from 1 to 50, 1 to 100. At some point, it can be 1 to 500, for example, 1 to 200. Long story short, my friends, the lower the leverage, so 120, let's say, the smaller position size you will control. The bigger the leverage, let's say 1 to 500, you will control bigger position. So for the accounts where you don't have enough money, you have small amount of money like $100, you can feel like controlling a lot using high leverage, like 1 to 100, for example. Don't worry, my friends. Everything is recorded again. You will be able to watch it again, go through it again. It will help you. I tell you, when I was starting, it was confusing as well. It was confusing for me to understand this as well, especially that I was never good in math, in mathematics. Some people say that you need to be good at math if you want to be a good trader. That's not true. I completely don't know math, and I'm still a very good trading. Everybody was starting at some point. I started 10 years ago. You are starting now. Don't worry. Everything will be clear. Slowly. It can be confusing at the very beginning, but eventually you will get there. Don't worry. It's really easy. Also, we have a demo account. You can open a demo account and you can trade yourself. You will place 5 demo trades with demo money. You don't have to invest with your real money, okay? It's like a game. Treat it like a game. After first 5 or 10 trades that you will make on a demo account, you will understand everything. So, my friends, yes, let's do like this. I think that all of you should open a demo account and start on a demo account trading, because I tell you, after first few trades, it will be much easier. You will buy one lot of euro dollar, you will sell a half lot of American dollar to Japanese yen. You will see how the price changed. You will see how the price moved, how big is the profit, how big is the loss, and it will significantly improve your understanding of this matter. So let me post you a link. This is the link to Axiori website where you open a demo account. Okay, this is it. This is linked to a demo account. You open a demo account here and you play with it. You play with it like a game. Obviously, when you want to be a profitable trader later, you cannot treat it like a game. You have to treat it like a job. You need to be responsible. You need to focus. You don't treat it like a casino or a game. But now, play with it. Install MT4, open a few trades, see how the price moves, try to catch some movements. I started with a demo account too, and really even this fake money, which I couldn't get because it was just fake money, it still made you happy that you were able to predict which side will price go, right? You open buy or sell, and then price goes in your favor, and like, oh yeah, that's nice, that's very interesting. It makes you feel good, so you need to feel it. You need to feel it yourself. I wouldn't advise you to open real accounts straight away. Well, many educators, they will tell you like open a real account, because probably they want something from you. They want your money. They want. It's like you would come to my flying academy, right? I am a pilot. I'm teaching how you. I'm teaching you how to be a pilot, how to fly planes, and I would tell you like, okay, sit down in front of next to me, and now you're the pilot. You will fly the plane. Okay, I would just look. No, you need a proper education. So first open demo accounts, guys. First demo accounts, and then play with it, play with it, play with it, and then you can open real accounts. Okay. The same goes with the p-value for the short position. So it's 55 pips in one lot. It is one lot, as you can see here. It goes. It's $550. But you will see this. You will see this on the platform really easy. Now we have like a technical background, and later you will get the practice. Few words about the difference between the Forex and the trading stocks. Because maybe some of you know how to trade stocks. It's pretty easy. You buy the shares of the company and you hope that they will go up. That's what I said. On the Forex market, you don't hope that the price will go up, because you can go both ways. You can as easily sell as buy. About which demo account you should choose? Any that you want, guys. Because the next webinar you will have about how to use MetaTrader 4 and how to use CTrader. So on the next webinar you will find out how those platform works. So now you can open those platforms, and then it can be confusing for you. But worry no more, my friends. On Wednesday there is a next webinar in this academy cycle that you all have to be on this webinar. Remember, on Wednesday, because the guy, my colleague Mitun, will show you how to use the platform. He's also a trader himself with nice ideas, with nice results, and he will tell you how the platform works. Let's come back to the differences between Forex and stocks. Trading times, that's what I said, 24/5. So you can trade in the middle of the night if you want. For example, you came from work late, stock exchange is closed, but you can trade on the Forex market, which is absolutely beautiful. Provisions and costs, commissions and costs. Costs to trade on the Forex market are lower than on the stock exchange because there is no commission on the Forex market. Okay, types of the analysis used. If you want to trade on the stock market, it would be nice to know a little bit of fundamental analysis. So all those indicators like price to earnings, etc., all those financial condition of the company. Okay, you don't want to buy a bankrupt company. But on the Forex market, you don't need to go into details of the fundamental analysis, which can be confusing. You can use just the technical analysis alone. You don't need a degree in finance, in economy to understand this. It's pretty easy. You will see on my next webinars about the technical analysis that it's very easy. So you will only need this. The leverage as well, that is a huge difference. Now, in order to understand more advanced, let's say, articles, publications, etc., it would be nice for you to know a special dictionary, some special words that traders use. Because most of the materials about the trading is written in a certain language, so you would like to need you would need to know what does it mean. Okay. Blah, blah, blah. About the video of this webinar, guys, it's recorded. You will get this. You can write to us. Don't worry. Bear with me 5 minutes. I will tell you how you will get this recording. First, the dictionary. So, demand, bulls. Why bulls and bears? Why bulls and bears? There is a lot of animal reference in this dictionary. Tell me, bulls are those who buy or want to earn money when the price goes up, and bears are those who sell. Why bulls and bears? Bulls up, bears down. But why? But why we say like this? Bulls up and bears down. Yes, bulls when they attack with horns. Let me create a bull for you. This is really nice bull. They attack from the bottom to the top, and bear. This is a very fat bear. Attack from the top. Yes. This is mild bear, but it attacks from the top with his claws to the bottom. That's why. Yes, bulls and bears. All right, let's go further. Greenback. Greenback is American dollar. Sterling is British pound, and cable is British pound to American dollar. Why we call British pound to American dollar a cable? Thank you. I try my best to draw the best bull and bear in the world. My friends, why cable? Why cable? Why British pound to American dollar is called cable? Yes, thank you very much. Cable across Atlantic. So when they were sending data from UK in Europe, here to United States, it was done by a cable on the bottom of the ocean. That's why a cable. What do we have there? Swissy, Swiss franc, loonie, American dollar to Canadian dollar, Aussie, Australian dollar to American dollar, or Aussie, like this. Kiwi, New Zealand dollar to American dollar. Another more animals. Hawks. Hawk are those who prefer rising interest rates or higher interest rates, and doves are those who prefer lowering interest rates or lower interest rates in general. Scalping. Scalping is a thing which you are probably attracted to. So scalping means that you open a position for a short period of time, let's say 5 minutes. You just want to catch a small movement from here to here, and you go with big position like one lot, and you try to catch like 10 pips, for example, in 5 minutes. And then you think like, okay, I'm gonna make 20 entries like this every day and I'm gonna be a millionaire. Well, no, my friends, I don't know anyone who is a scalper and is a profitable trader. Scalping looks awesome on TV and YouTube videos, but it doesn't work. Well, obviously there are people who earn money on scalping, but it's extremely difficult. And on this course, I will teach you easier way, more relaxed, the way that you will have more time for your family, for example. Because in order to scalp, you need to sit in front of the computer. You may think, okay, I have 3 monitors. I look like a professional trader. I look like Charlie Sheen from Wall Street, and it's awesome. But believe me, you would prefer to spend a lot of time with your family, with your girlfriend, playing golf, going to the gym, riding a bike, rather than sitting in front of the computer. So that's why I will show you a strategy that you don't have to spend 8 hours in front of the computer, but less, much less. 10 minutes, 15 minutes, 1 hour, less than during scalping. Carry trading, my friends, every currency has interest rate. What is interest rate in Nigeria? Or everybody writes interest rate of the country where you're from. I think that interest rate in Poland is 1.5%. 6.5. Yes, we have 6.5. 18%. Ooh, that's a lot. That's a lot. Every currency has interest rate. When you buy currency with higher interest rate and you sell currency with lower interest rate, you have positive swaps. You buy currency with higher interest rate, you have positive swaps. Every night on your account will be added certain amount of money. Let's say $12. Just because you have the position with higher interest rate. That's why there's a carry trading strategy, which means that when you buy currency with higher interest rate, you have additional money on your account. It goes the other way. If you buy the currency with lower interest rate, selling the currency with the higher interest rate, you will get negative every day, every night. My friends, we are getting closer to the end. We're gonna finish in 5 minutes. Don't worry, I know that you cannot study in focus for too long. 1 hour is enough, especially that we have 9 webinars, still 8 ahead of us. So don't worry, I'm finishing soon. I know it can be confusing. I know that you want to learn right now because you are here with us. This is beautiful. If you want to learn, if you want to read, you have to add me on the Twitter. This is my Twitter. And you can add Axiori on your Twitter. On my Twitter, I post short video every day with the three best trading occasions. I talk a little bit about the market, and then I analyze 3 hottest, the best setups in the Forex market. What you can do is to listen to those videos. They're short, 3 minutes, 4 minutes. And then, for example, on a demo account, apply it. Apply the situation, if you like it, of course. Because I'm not giving recommendations. I cannot tell you if you should buy or sell. No. I'm just analyzing this situation. You can follow it. You don't have to. Okay? So on a demo account, you can check, click, buy or sell on those instruments that I'm talking about, just to see how the platform works, and then learn how to trade. I will highly recommend you to watch those videos because there's loads of knowledge inside of them. So yes. Okay. So this Twitter, follow on Twitter. Yes. Next one. This is our email. I strongly recommend you to write down this email, support@axiori.com, because on the other side of this email there is bunch of guys, my colleagues, who are eager to help you with your all questions. So if you have a question, how the platform works, how can I open a position, should I use MT4, should I use this, what's this indicator about, how can I transfer money, etc. Any question that you have, ask those guys. They will answer you as fast as possible, and they will be more than happy to assist you in your trading journey. support@axiori.com. This is also a place where you send an email and you tell them, I want the recording from this video. I want this video. I want you to send me the link with the recording of this video. That's how can you tell them, and you will receive the link with the video. Okay? Okay. My Twitter account, I will post it here in the chat. This is my Twitter account. Follow me for trading ideas. Now, my friends, brothers and sisters, disclaimer, very important part, we don't give financial advice. We don't give recommendations. We don't give investment advices. No, this is education. I show you how the market works. I will never ever tell you this is euro dollar, buy here. No. What I will tell you is that I am analyzing the situation on euro dollar, which looks bullish because we have this formation and this formation. That's it. Okay. All right, my friends. That was a very important part. Now, any questions? I hope that you have a lot of questions. Definitely to the guys in the support@axiori.com. If you have questions about this the webinar, what we mentioned today, please ask here. If you're too shy, don't worry, because all your questions will be answered if you write on the support. So don't worry. If you don't want to ask now, for example, because you're in a hurry or you're a little bit ashamed to ask questions, don't worry. Send them to support and they will answer you. Okay. I can see I am new to FX. How can I help myself in trading to start? You are in a great place because you came to the webinar. You will receive the link to this webinar and you signed for the cycle of 9 webinars. So this is how you start. This is precisely how you start. You start like this with this first webinar. My friends, on Wednesday, there is another webinar. On Thursday, there is another webinar. You just had first webinar in the cycle. We still have 8 webinars left. Make sure that you will be on every single webinar in order to learn how to trade. Every lesson is important. It's just 3 weeks. After 3 weeks, you will have head like this with all the knowledge from the Forex market, but you will not need anything else. That's just it. 9 hours, more than 9 hours of knowledge for free. Guys, it's for free. I'm not charging you anything for this. You get 9 hours of live webinars for free. Yes, the support desk will send you the link. Okay, my friends, I can see no questions. This is beautiful. Thank you very much for attending this webinar. And another thing, after the end of the seminar, you will be able to rate this like stars in Uber, right? I'm not saying that you have to rate it with 5 stars. Rate it as you like it. If you didn't like it, also say that you didn't like it, and I will be able to make it better later. So leave your feedback after the seminar, after the webinar, rate it with the stars, and see you on Wednesday and on Thursday and next Monday, next Wednesday, next Thursday, and the week after this. Okay, all the best. Good luck in your trading. See you guys. Thank you.